So, hello. How's everybody doing? Is sound okay? We rocking and rolling? Everybody's good? So, welcome to the show, guys. A happy Labor Day weekend to everybody. 7th of September 2015. Not making trade calls recommendations because you and only you're responsible for the trades you may decide to take. And the fact that you're listening to this means you've read to understand you accept all the disclaimers here on the website and on the blog, understanding that we're just performing some live technical analysis in a learning context for educational purposes only. So guys, it's a pleasure to share some time with you. It's a bit of a dead day in terms of US markets being closed. I mean, electronic markets are going to be open for a bit, but globally speaking, it's a long weekend. It's a bit of a holiday chop, so we've got lower volumes, lower flows, less interesting day overall. So what I'm going to do is, as usual, trying to pay it back forwards a little bit. So we're going to record this weekly Outlook live, and we'll do as much of the hey Lai, hey everybody, hey Derek, hey Dels. We'll do this live and we'll take an open Q&A. So as always, nothing's off the cards, everything's open. Just hit me up with any question you may have. We'll try and tackle as much. We'll try and make this, run for, I wouldn't want to make it more than 1 hour. If not, it's a bit of a pain to upload it to YouTube. It takes ages. And so what I'll do is, the plan is to start going through the charts, start going through what I think are the most interesting things to look at in terms of charts, moves, levels for the week. And then anything anybody wants to look at, if I have it here on the platform, we'll look at it. And if anybody has any other Q&A questions about whatever, I'll keep them towards the end. So if you ask something that's not chart related, I'll see it. You don't have to ask again. I'll try and address it at the end of the session if we have time. FX Max, you've already asked a bunch of questions. Just keep in mind that there's an awful lot of content on the blog. So for all of you that have questions also about, the business of trading, psychology, what it means to be a trader, stuff like that, don't hesitate to just go in on the blog and look at the interview section, because there's a bunch of stuff. There's a lot of content you can read up on. But again, you can ask me here live if we have time. I'll tackle as many questions as we can towards the end of the session. Okay, so first things being first, in terms of context, what to expect. So we're going into a bit of a slow day today, right? Not an awful lot happening. We've got US markets closed. So what to expect for the week? So all things being equal, you would expect intraday price action today to be fairly muted unless something hits the wires. So for broadly speaking, the latest trading range to stay intact. The market may be trying to and test that, but because we had that super Draghi day on Thursday, we had the and non-farm payrolls on Friday, we'd be looking at it in terms of the Thursday-Friday range, or if you want to be a bit broader, the broader range of last week, for that to contain at least today, unless something aggressive happens or something hits the wire. So that's the base case scenario. Now, this week should be very interesting, apart from the fact that we've got China coming back, because they were off. I mean, we've got an awful lot of data in terms of China data. We've got Australian data coming out. Keep in mind that we also have a rate decision out of the BOC. We've got a rate decision out of the RBNZ, so on Kiwi dollar, right? And unemployment data out of Australia, as I said, all that Chinese data. And we do have unemployment claims. We've got a rate decision out of the Bank of England again. So again, there's an awful lot of data that's going to be interesting. And again, a lot of that China data and those central banks on the wires are going to be interesting to keep an eye out for, because they could be potential movers, especially because we're at such extreme levels on some of the commodity cycles too. Things are quite interesting. I mean, it looks like FX Pro's just we lost connection, but that doesn't matter. Market isn't moving that much. Anyway, so one thing I wanted to start off with, which I think is an interesting chart and hasn't been that interesting for a while, but now has popped back to more interesting levels, is cable, right? So our assumption was for cable was that it's not loading. Oh, it's interesting. Why is it not loading the chart? Let's see. See if we can stop this. Is sound still okay, guys? Okay, testing 1 2 3, testing 1 2 3. Testing, testing, testing. Okay, are we back in action? Can you guys hear me again? Okay, so the joy of doing things live. Everybody can hear me okay, right? Lewis, can you hit me up if we're okay? Okay, rock and roll. So again, the beauty of doing things live, right? Not phased. It doesn't matter. It's just another day in the market. As we used to say, you know, there's fairly technical terms to describe this. Shit happens. You just got to carry on, right? So as we were saying, exactly where we left off. Let's hope the recording's still going. So anyways, what's going on? We said cable was a bit sideways chop, and we were not interested to do anything on cable, right? Because we had a lot of wheeling and dealing in this choppy range, and we said we needed to see some kind of breakout. Now, as much as we were fairly aggressively bullish here on this initial retracement for the long side, we were very aggressively bullish on this. Once we started to consolidate in a chop range, we lost our interest. Now, the fact that we started to put in a negative high here and it started to look way, come back into the zone, we said, even though structurally we are bullish cable, structurally one of our favorite trades is to continue to hold those shorts Euro GPB, even though it's a slightly crowded trade, we're going to be patiently wait for cable to come back down, especially because we had month-end flows, all that kinds of stuff going on. You don't want to fight it. Clearly, it was weak here. So as it started to move back down, we said either it holds this 155 and we can see a lot of chop here, or if it breaks, don't be surprised to first level it could try and base is around here, but don't be surprised if it comes all the way back down into these 5180s, and that's probably going to be the best place to start to maybe fade it even intraday, because you've got a very important support zone, you've got a confluence of previous lows, so we would expect this to catch a bid right here. So that's exactly where we did find a bid. Now, I'm usually very aggressive and I trade cable a lot. I traded very little in this range. So right here we had a nice little opportunity to get long off those Friday's lows, right? And now intraday there's some scalp short opportunities, but for the purpose of this session, we can look at a 15-minute chart in a second, but for the purpose of this session now, the focus is how we trade around the 5180s, right? Now, don't forget that we also have, you know, it's going to be an important data point on Thursday because we've got the bank rate, we've got the minutes released at the same time. So right here, the move on Thursday can be quite aggressive. So don't be surprised if the market reacts to the downside to see this aggressively going for these 50-40s to the downside. In the same way, don't be surprised to see this aggressively move back up towards these 53-60s. I think that the tricky thing of playing the long side here is that if we move back into these 155 zone, we're back in chop suey territory, right? So I still think that the pure play might be expressing views on Euro GPB, and I think I would continue to focus on this as more of an intraday trading vehicle to be nimble. I think the interesting levels to engage are going to be these 5180s. If we move down 5040s to the upside, the 155s. But I would expect to continue to see a lot of choppy action inside this range. So I'm really not too, I don't have a big conviction view here. I think even though longer term it looks like we should see some more move up, I think it could be a very choppy ride, and I don't think this chart is probably the purest way to try and express this view. I mean, that doesn't mean that a purer way can't come across and things can't line up, but for now it just looks like it's more of a tactical trading vehicle as far as we're concerned. Okay, now again, just to clear it up, we always say or I always say we, because I talk about in general the people in the weekly webinars, and as a bigger picture because I don't like saying I. It sounds a bit weird. Okay, so it's not, we're not using the royal we, it's just that that's just me. Okay, so exactly, right? So what's going on here, right? So this is cable coming back in. So you see this is a classical day where understanding context and understanding what to expect is particularly important, right? So what does that mean? That means that when we're coming into this slow day, right, we had this important low. What we said here is usually on Monday, we always look at the Friday range. Like here, you can expand it to the Thursday, Friday, because Thursday was an important day. But even just looking at the previous day range, it's always something interesting to keep an eye out, because it sets some boundaries, and you know that, you know, for something fundamental to change, the market has to have enough energy, or the shorts or the longs have to have enough energy or willpower or gunpowder, whatever you want to call it, to break it outside of that previous day range. So the way we look at it is when we don't expect a lot to happen, when there's not an awful lot of news or there's not an awful lot to do, sideways trading, we expect those extremes to be tested. We expect to see a lot of weaker players get taken out trying to play with tight stops in the middle of the range, and we expect the bigger orders or the bigger size to be protecting the extreme, right? So what that means is that if you're trading Asia, etc., you know, the play for us is either, you know, number one, the expectation is for this to stay in range, so to look for long opportunities with stops below previous week lows. Now, it's not a particularly high odds trade in terms of there's not a lot of liquidity in general, but the expectation is for it, even in a sloppy way, to stay in range, right? And the other expectation is for the opposite side of the range to be protected, right? So you see, it doesn't have to be pure, you know, here in terms of it did break, but it couldn't hold below. I mean, above, you've got a very nice 1 hour reversal trade here. You could have traded this to the downside for a little scalp, nice little failure at this Friday extreme. But again, I don't want to talk about the actual trading so much. I'm more interested about the message and more interested about discussing, you know, what to expect on a day. Does that make sense to everybody? So, you know, it's important to have some expectations for context. Now, of course, if this comes in at the beginning of the day, since the expectation is for it to stay in range and it breaks and it gets traction below, you do not want to be stubbornly long, right? If it breaks to the upside here and it gets traction, it's the kind you do not want to be stubbornly short, right? That there's a lot of things that come around with that expectation, right? But it's important, you know, if you come into a slow day like this and you expect to see a gazillion trading opportunities, a lot of two-sided action, you're likely going to be disappointed, right? Okay, so that's where we are on cable, you know, and that translates to Euro GBP. We talked about this 7260s being really important right here for direction. Now, of course, we have to deal with the whole DAX, the whole equities, a Euro trade kind of thing, and it's going to be tricky. But here, as long as we can't get aggressive buyers here or more of a squeeze, we would expect to see a lot of sideways chop around these 7260s. And, you know, as long as we start getting moves, daily closes below very quickly, we would expect this to continue trying to move to the downside, potentially complete into those 6720s, 64s. However, if the squeeze continues, with flows on DAX, etc., we wouldn't be surprised to see us this move all the way back into the 77.50s. But at this place, then this is the next place we would be interested to look for possible shorts, right? So right here, we look at this as a broader range. We look at these 72.60s as being a pivotal level, and we just have to wait for the flows to come in. Now this is a bit of a tricky one because we'll have to see, we might have to deal with a squeeze on euro. We'll have to see what comes out of the BOE on Thursday, but clearly it's an interesting chart, and we have some interesting levels there. In terms of tactical trades, it just, pretty much every move back into these highs has been a sell to try and scalp it to the downside. The way we've been looking at this as trying to build some kind of a core short and try and scalp this range to improve the average cost base of the trade, and then just keep on taking some off and keep on adding it back, trying to build back a short position. So we'll have to see how the cookie crumbles, but that's at least the plan on Euro GPB. Okay. In terms of euro, not an awful lot is going on euro. Pretty much, we discussed this again. We started doing those morning radars, and I discussed this on the blog and on Twitter. I talked about those 4-hour closes we had on Euro GPB, on Euro USD right here, right, when we had that big squeeze higher. And the assumption was that as long as that swing high holds, then the assumption is for a move back into mid-range and move back into the 1092s, right? So we're back into that area, and we're seeing a lot of choppy action here. Now we're going to have to wait for the volumes to come back. We'll have to wait for that holiday weekend to get out of the way, to get this holiday weekend to get out of the way. We'll have to wait to see what comes out of China. But right here, we're back in mid-range, right? So we don't... Marty, no, we haven't done dollar CHF. We can do it, sure. Now, so I don't think there's an awful lot of edge here. I suspect in terms of narrative, people can construct a fairly eloquent bull case here, and some people can construct a fairly eloquent bear case here. Our assumption is still that we'll see a lot of choppy trading inside this broader range, and unless we trade outside 115s or 104s, this is just going to continue to stay very, very choppy, right? I know that's a gigantic range, but it's important to understand the context. And the context is that there's so much going on that unless we can break outside this choppy range, fundamentally not an awful lot has happened. So would I be particularly interested from a bigger swing perspective to operate here in the middle of the range? Not so much. If I had a gun to my head, I'd probably, technically it probably looks like a long. Structurally, fundamentally, it probably looks like a short, but I can't short something into mid-range really. So we'll have to see if we get some opportunities, but I suspect a lot is going to be factored around this whole next FOMC, right? So don't forget that we have FOMC next week, and that's going to be very interesting. So I think a lot of people are going to be looking for these following days or this following week pre-FOMC to put in some swings, some very aggressive swings, and that might mean some squeezing, some covering into that FOMC, and then the bigger moves to resume. We'll look at that in a second on some of the commodity pairs. But right here, I think the picture is far from being crystal clear, right? Crystal clear, sure. Yeah, you see it here from a shorter term perspective. We had that big move, Super Mario on the dance floor, tap dancing his way through the strobe lights on Thursday. Then we had the non-farm payrolls, which was a bit of a non-event. We just had a lot of stops cleared both sides of a tight range, a lot of weak players getting taken out with no fundamental change in outlook. And right here, the expectation for today is just for this to stay in range. So you see it's still inside that Thursday-Friday range. I think there's very little edge. I mean, gun to my head, I'd have to play the long, because if I'm just assuming for the range to play, I've got a better risk reward to try and play for the long side, but I'm not particularly interested. By the way, the last big dip recent was right here, And surprise, surprise, if we just extend this line, you see where we're trading, we're pretty much right there. So as we like to say, much to do about nothing for now. But again, not surprising that that's what's going on a day like today, right? When we're talking about volumes coming back, it's just an assumption based that U.S. markets are closed, right? So in terms of your question on volume data on spot, there's no real volume data on spot because there's no centralized exchange, right? So I'm sure there'll be people that think they're looking at volume, but they'll be looking at volume for their specific broker or maybe, you know, some pool, but there's no centralized exchange. So if you're interested in seeing volume data on Forex, then you'd have to look at a futures, you know, you'd have to look at the futures, and there you have a centralized exchange, and there you can track the volume with no problem, right? But if you're looking at the spot, I would shy away from anybody claiming to have precise volume data or any indicator that, because it's a false picture, right? But right now, when I was based on the comments making before about when volumes return, that's just because today's a bank holiday in the US, okay? So what were we looking at? Marty was asking us to look at Euro CHF, right? Sorry, USD CHF. So let's look at that USD CHF for Marty. Again, Jukebox is open, so no need to insert a coin, but you can pick your pair. We'll go through anything anybody wants to look at. So what's going on here on USD CHF? So again, our assumption is all things being equal, this is not a pair we'd like to trade actively, okay? Simply because we've had a lot of wheeling and dealing here, because there's central banks involved, etc., etc. So, and also if you look at the chart, after you see something like this, there's, you know, there's a lot of chop inside these broad ranges that have been set. So there's not an awful lot that we would want to do. I think there'll be people trying to fib all kinds of moves and attack this in a lot of different ways. We don't think there's an awful lot of edge. You know, some people will even say, well, we consider this to be a no-go, so completely ignore this, right, and just chart everything without this day, saying, you know, we're normalizing back here. It's not something we're too fond of doing, okay? So again, for me, it's a bit choppy. There's no real clear direction. If anything, if I had to trade it, then I would be trading something like a 1 hour or 15-minute intraday, right? So here it looks like we've got a bit of a toppy action here. Usually when you see this kind of action around triple tops, right, usually market ends up breaking, right? It doesn't mean it has to break now. It doesn't mean it has to break tomorrow, but usually it means that it ends up breaking the level. So right here, the way I just look at this simply is the thing that would attract my attention, Marty, does this make sense? Is the thing that attracts my attention is the recent move, right? And the recent move is also based on, you know, what happened on Friday, right? We talked about that Thursday, Friday range, and you can highlight it. You could see it with that wick. Okay, so what it means to me is right now there's not an awful lot to do as long as we stay inside this range, right, from a tactical intraday opportunity. But as long as you understand that there's likely less volume in the market, so even trading with a tight stop, you've got a bit less edge, thinner liquidity, you might get a lot more air pockets, it's easier to move the price. All things being equal, I'd be interested to engage at the extremes, right? So that may mean, you know, shorting a failure here at highs, shorting a move, front run short into the highs, trying to have a buy stop behind. There's a lot of different ways to trade it. Now, you know, I don't like buy stops. I don't like playing Momo plays and stuff like that. But pretty much there's an awful lot of chop here. So again, I would be a bit cautious here, but I think no major view from the bigger picture. And again, you can take your you can make your conclusions based on our views on euro, what will happen here. But right here, there's just a lot of sideways chop here. But there may be some edge, right? There may be some edge here, right? Hey, Nick. Yeah, we'll look at JPY in a sec. Sure, on the radar. Tim, USDC CAD, sure. Does that make sense, Marty? Okay, so yeah, USD CAD's a chart we've been similar for us to the Euro GPB. We've trading it fairly actively, fairly aggressively. So again, I think you can make a good case to the short side here. You can make a very good case to the long side. I think structurally here, the way the chart is trading, it looks like all the dips are getting bought, and it looks like it wants to rip higher and break those highs. Okay, now because of our view on crude, and we would think it'd be healthy for crude to base, and because in general we prefer to sell green and buy red, we're more contrarian in the way we look at the market. We've been trading the short side very aggressively, right? And as I was explaining to some people, I mean, right here it's been such a good play with all these moves down, is that the way we've trading it is just, you know, taking half off, shorting into those high 32s, 33s, and taking half off into the low 32s, and then adding it back. So at this moment, you know, the trades is pretty good trade as is, so I really couldn't care if it ends up breaking or not, but that's still in play, and there's just a lot of choppy action. I think it can move very, very quick, but as we said, unless we start getting day closes above these highs, or unless we start getting day closes below the 3100, it's just a sideways chop. So I think I think the majority of the bulls aren't even going to think about the possibility of this not being a long unless we start to get a daily close below the 131. And I would suspect that some won't even blink unless we get a daily close back below those 129.30s, right? And the shorts are probably just keep on looking for failures here, looking for this to hold, looking for crude to continue to catch a little bid. And again, we might see some probing of the extremes in this low liquidity move until we start getting back towards the data and the volumes start to come back. But there's a lot of sideways chop, right? And that's something a lot of people fail to understand or have trouble grasping, is that when you're looking at markets, the context is important, and there's not always something to do, right? There's not always the best trade might be a no trade, or the best trade might be a trade you're already in. So we're in the markets are really waiting for clarity, whether that's from the Fed, whether that's from other central bank, it doesn't matter, but we're at extremes, and the markets are in these sideways chop ranges. So it's tricky to deal with that, but you have to understand that when they're chopping around at these ranges, the final move when it comes can be very explosive, but you get a lot of fake out, a lot of slow action, and you have to patiently wait. You have to put yourself in a condition not to blow all your bullets before the better trades come along, right? A lot of it is a waiting game, right? USD JPY, what's going on in USD JPY? Well, again, our assumption was those 117s were going to catch a bid and move back into the 120, and it's all about the 120, right? So there were some trading opportunities around there. I suspect some people might have traded this. I didn't trade this. It was just very choppy that day. I just had no, not something for me. But again, fairly nice hold of support here. For me, it's really all about these 120s, and I suspect a lot of people are focused on this 120. So expect to potentially see a lot of very choppy action around this 120. But the problem is that we're in a bigger, choppier range, right? So similarly, unless we close back above these 125s, 126, the shorts, the guys looking for a bigger correction are not going to change their mind. Unless we start to close back below these 115s, the longs are probably not going to change their minds, right? So what that means is that will probably translate with a lot of velocity inside range, right? That can catch you out. Doesn't mean that there are a lot of trading opportunities, but you have to understand that in this kind of consolidation, you could see 100, 200 pip moves, and broadly speaking, they haven't really changed the fundamental outlook for the longs or for the shorts, right? So I think there's going to be some two-sided trading inside this range, but I think it's very, very choppy. So in terms of the way I look at the market, this is not something I'd be too interested in trading. I'd much rather trade something that is closer to an extreme, whether it's a range extreme, whether it's a swing high or a swing low, rather than engage in something that is choppy choppy here. So I don't know. I can't remember who asked the question on JPY. I don't know if you have a specific question on USD JPY. If not, we can look at Euro JPY. But there's a lot of sideways chop, right? And probably, you know, we'll have to wait until this FOMC. But again, I would say on all the pairs, don't be cautious in the run up into the FOMC, because even if you see a 200, 300 pip move on any pair into the FOMC, it doesn't mean that a new big move has started. It may just be positioning and swearing ahead of the FOMC. So I think if you're looking for the next big move, you probably want to wait for post FOMC. Okay. Is Debbie keeping an eye on time? So what's going on Euro JPY? Euro JPY, again, not an awful lot. We were looking at these 133s. I think, again, if memory serves me correctly, I talked about it on Twitter, and you know, it's a bit of a sucker's play to try and get long looking for this 133. You know, the round numbers are a lot more interesting when they haven't been touched for a long time. You know, after we've been defended so strongly, right, we're slowly coming back here. It's almost too good to be true for this level not to get pierced, right? So you know, we're looking for this to break. Now I think it's all a play around the 133 here, right? So what that means is that if we get daily closes below this 133, then I wouldn't be surprised to see this extend to the downside, probably, you know, back towards this next previous resistance zone, back into the, you know, 130s, 129s even, you know, this whole range back down here. And if we hold, you know, we can catch a little bid, you know, maybe we can move back up into this previous support acting as resistance. So yeah, I mean, you can. I'm not a huge fan of having a fib up here, but sure, you could use that, you know, in terms of, you know, coming back towards the 78.6, you know, 129.20, something like that. We could easily move right back down there, right? But again, it's not something I'd be too interested trading here, but I think it's looking weak, right? It's looking weak. GPB JPY, again, what's going on GPB JPY? So do you have a specific question on it? I mean, if you're looking at on the monthly here, yeah, sure, let's put them on. Let's go crazy. Let's put some moving averages on the daily. Right, you see what's happening, and again, it's pretty much like some of the indexes, right? We just sold off hard, right? So there's a lot of resistance back to the upside. I don't think there's an awful lot of edge with having all the moving averages here, because I think just looking at previous support and resistance can do the trick, right? So fairly easy way of looking at it is look at, you know, does it make sense that these are the two previous swing lows we had, right? These two supports we had. So, you know, what I would say is the very easy way of looking at it is just drawing two lines here at these two supports and say, well, you know, as long as the market can't get back above those levels, this is likely going to be continue to trade with a heavy tone, and the market will probably like to try and at least sell back into this for the next move down, probably all the way back into this support here. But, you know, I'm not too interested here in doing anything. It just looks like this is a possibility. On the monthly break of monthly trend, I'm not sure what you're looking at in terms of trend on the monthly. I mean, here, the way I would look at the monthly is you've got this fib move from highs to lows, failed at lows right here. So this is a nice double bottom, and we would expect ultimately this 61 to break, right? So if you're looking at it on a monthly in terms of the bigger picture, you know, hold on, let me get my crystal ball and do some voodoo here. But I would say, you know, something, I hate saying this because it just sounds so silly, but, you know, towards the end of the year, you know, you'd expect this to continue to have some legs. Now, it doesn't mean it can't correct a lot more, but it looks like from a bigger picture, it's still bid. Short term, it looks like there's no reason why, you know, rallies won't get sold and we won't move right back down into these lows. But again, I'm not a huge fan of trying to. I think there's so many nicer and more interesting opportunities also with asymmetric risk on some of the majors than try to play, especially CHF or JPY, and especially try and not express the view through a major. Okay. Yeah, I mean, the ES really has been, let me just clear this up. The ES has been pretty pure. Again, anybody watching the Sunday outlooks for the whole year, our view hasn't changed, right? Every Sunday, as we were hovering around these 2100, all these pops higher, we kept on saying we were patiently waiting, building swing shorts. We felt that this had to move back to the downside. We felt that the healthy move was to the downside. So again, you will not see us complaining about the move down. Now, once we got the move back down, which was a lot more aggressive than everybody thought, right? Or in terms of velocity of the move. I think if anybody who tells you, oh, I was expecting that kind of move to happen that quick, I call BS very quickly, right? But once we based here, we said, and we saw these failures to take out this low end, we said, okay, most likely until non-farm payrolls, and if this doesn't resolve quick, possibly all the way till the FOMC, we'd expect this to be stuck inside the 1900. So 1900, 2000 level. A lot of choppy action. We expect to see a return of two-sided action, nice intraday moves, very aggressive moves, decent action, and a lot of opportunity to trade. However, when you see these things happen, mandatory, if you want to be here to fight another day, what do? The ranges are starting to expand, the volatility is expanding, you drop your size, right? You can capture the same kind of moves, the same kind of stats by trading much smaller, so there's no risk to continue to trade your usual size. You step back, you drop your size, and you play the ranges until they finally break out. So right here, unless we get more clarity out of China, out of the FOMC, or some other catalyst for the market, I don't really expect this to break outside, but what has happened, on this final bake, on this healthy move we're looking for, it's cleared the market. So we expect it's opened up the room for some good two-sided markets, for some decent moves and some decent trading. So we're as happy as can be on this, right? So nice action, okay? So what else is going on? What else haven't we looked at that anybody wants to look at? Yeah. I mean, crude. What we talked about was this 45 being pivotal. So again, we're swing long on crude. We're looking for this to try and make its way back higher, and we expect this to be an interim base. We expected this to be a base, but again, to show you, it's still healthy trading opportunities all the way back here. Then it's broken, chance to reestablish. Keep on playing this. But again, if you're looking, if you're thinking about it in terms of longer down the road, we still prefer to play crude to the upside rather than the downside, even though it doesn't mean it can't go lower, even though it doesn't mean that those lows can't be retested. What I would be looking here is for to give you an idea for action, is what's happening around this 45 level, right, and this dip low just below. So as long as market keeps on catching a bid around the 145, this 143.50, and we don't get a daily close below, we expect to see very volatile chop here, but a potential that's trying to build a little foundation for bounce back into the 55s. Now, if those 43.50s give from a day close, then I wouldn't be surprised to see potentially even a very quick move back into the 30s, 39s, 38s. But right here, this is where the fight's being fought here. So we'll have to see what happens. We'll have to see how this moves. Hey, Ken, how's it going? Gold, there's no real change in outlook for us on gold. We're stuck here in a broader range, right? So the broader range is 1200, 1150, 1100, right? So we consider this a failed break of range. So the range hasn't changed for us, and we expect this to continue to try and rotate back towards the 1150s. A massive shout out to Miss Gold. So again, but you see what's happened with these recent breaks we've had, especially on the futures. We've had a lot of nice two-sided action, right? So we had that bounce off those lows. We had a negative close here on the daily right at the moving average for a move back down. Once the market rotated back down, we got nice little bids coming back at this 50 back here for a nice little pop. This would not be something we trade to the long side, retest of a 50 back, lower odds, right? So we'll have to see what happens. No, I haven't been, I don't trade gold actively. I'll have positions open on gold. I have a swing long open on gold, but I don't trade crude or gold actively. I trade those more as positions. Okay, so right here, it's the same thing. We'll have to see how this plays out, and you know, we might need to wait post the FOMC to what happens. I still think similar to crude, these are susceptible to seeing retests of those lows, but I think that unless something drastic happens, we're forming some kind of short-term bottoms, and we'll see some kind of rotations back higher. Hey Ken, no, we do these. We usually record weekly outlooks on Sunday, and I post them on YouTube. But since the U.S. markets are closed today, and I'm not doing the weekly webinars I usually host every day, I thought I'd just do something for everybody, free access session, right? But yeah, you could just flip, you can go on the blog, you can see on the Learn section if you want to see the link to the daily webinars, but it's just a free session we're doing today for fun. So that's what I would say on gold, and it's a similar thing on silver, right? On silver, it looks like it's trying to put in a bottom, but again, it's just it's having a hard time, right? So the range we're looking at in terms of the broader range on silver is still 18, 16, 14, and now it looks like it's tried to put in a little bottom. However, I would expect to see very whippy action, and the bull case not to be clearer unless we start to get daily closes back above the 15. Similar to gold, similar to crude, those lows are vulnerable unless we get daily closes above, you know, these 15s on silver, the 1150s on gold, etc., etc. So you see, it's a recurring theme, right? Everything, it's pretty much the same chart across the board, bar some differences, right? So how are we doing for time? It looks like we're about 45 minutes, something like that, right? So yeah, I think the issue on and this is an interesting one too, right? What's going on Aussie, right? So on Aussie, we keep on getting a lot of pressure. It's just unable to bounce, right? So it's a good chart, right, for people who say sooner or later it's going to bounce, right, or everything's going to revert to the mean or whatever, right? You know, volatility is mean reverting. You know, price can stay very extended for a very, very long time. So it seems incapable of finding a bid, right? Now, sooner or later it will. I suspect we may see covering around this these rate decisions and going into the FOMC. I think the broader focus here is what happens on a bounce, right? So I think don't be surprised to see this potentially rally 200-300 pips to the upside. However, as long as you don't get a daily close back above these 7190s, 7250s range, everybody and their grandmother and their hamster, right? All the trend followers, all the swingers out there are still going to keep on whacking this, right? They'll keep on being short. I think it's going to be very difficult for people to review their bearish outlook on this unless it starts to close back above that level. Then, as far as I'm concerned, as long as it holds inside the 7250s, inside the 76s, then the outlook is going to be sideways chop. And if it closes, then we could get bigger corrections. So, you know, for this to turn really bullish structurally, we'd have to be back above those 76s, right? As long as we stay inside the 76, 7250, this is just a lot of chop. And as long as we don't close back above this level, these 7190s, you know, this previous resistance here, so probably stay bearish. So I think we may see some interesting 100, 200 pip moves as we go towards, you know, this week. We've got a lot of China news and stuff. As we go towards the FOMC, we'll see positioning squaring into that. But we'll have to wait for these next 10 days, broadly speaking, right, or next 9, 10 trading days to be over to have a clearer picture, I think, on what the next point is. But clearly, you know, as far as the way we look at the market, I wouldn't be chasing shorts here. I'd be if you were desperately looking to short, I'd wait to get some kind of bounce to short into, right? And Kiwi's a tricky one. You know, as long as we're still stuck inside this big wick zone, it's a really tricky one. It's a very similar discussion to Aussie, right? It's a very similar discussion to Aussie. Yeah, DAX. What's going on DAX? Well, DAX again. Uh, Let me clear up this chart. So we've been looking for this to break down. Um, we really like the failed break at this daily close back at that 100, and we're looking for this to come right back down and test those lows. We weren't expecting this to sell off that aggressively that quickly, of course. So right here, I think DAX is looking weak, right? I think DAX is looking weak. So, you know, the whole issue, though, is, you know, how the correlation is going to play, how the euro flows are going to go on this. But right here, even if we, the big question is, are we going to see a bit of a rally? And on no substantial change, no big change out of Super Mario, whatever, we'll probably see sellers coming in into these previous lows, into this whole area. Or are we going to continue down without having any kind of retrace and take a stab back at those lows, right? So essentially, it's very similar to the ES. Now, you know, you want to be careful with those, with the way the correlations are playing out, trying to stay stubborn on euro when DAX is really getting sold or if it starts to squeeze up. So you want to be cautious. But again, in terms of the equity side, even though structurally DAX looks weak, I still much prefer playing the ES, right? Exactly. Any other chart we haven't looked at? Any chart anybody wants to look at? Anything anybody's focusing on? Yeah, we covered all those. I'm going to post the recording in a sec, as long as it's just going to probably take 10 minutes to load on YouTube so you can watch the recording, sure. Yeah. Okay. Opinion about possible FOMC rate hike. Again, I think I'm not a big fan of spending too much time on that stuff. I think you can make an excellent argument on why they need to hike or why they don't need to hike. I think in terms of the data, strictly speaking, it's going to be difficult for them to find an excuse, real excuse not to hike. But then again, it depends what happens out of China. I suspect that if they do hike, you know, anyways, it's more of a psychological issue, because if they if they end up hiking 0.25 or they rate 0.15 or whatever, it doesn't really mean anything. It's more of a psychological thing. So they might just go ahead in the same way. Bottom line is, I think there's very little point or very little edge in trying to crystal ball it and see what's going to happen. I prefer to let the talking heads and the analysts worry about that. I prefer to focus on the charts and trading the levels. One thing you can be sure is we'll be ready to take advantage of whether they hike or whether they don't hike. That's what we're here for, right? Do you use any single indicator or just price action? Thank you. Again, I would really suggest you go through all those interview sections, because we talk about that a lot. But I don't look at any specific indicator. I don't believe in any specific indicator. You know, whatever works for you. There's nothing magical. I'm not a big fan of any indicator that's lagging. I prefer to look at horizontal indicators, right? So that may mean a support resistance line, that may be a fib. I'm not a huge fan of anything that is diagonal, trend line, stuff like that, and I'm not a big fan of anything that's lagging. So I'm not a big fan of oscillators or stuff like that. Good stuff, Marty. We're waiting for you. And again, the problem is that you just don't know, right? Everybody's always thinks, if you knew the data ahead of time, and most people had the data ahead of time, they wouldn't know what to do with it, right? Because correlations change, market positioning changes, etc., etc. So it's not as easy as saying, okay, they hike, this is the trade, they don't hike, that is the trade. Because usually you'll have a lot of volatility that will likely take you out if you're trying to trade in a responsible manner, or you just have to take too much risk to try and play some kind of binary event like that. So you're much better off playing blackjack or something, right, than a pure binary event like that. And again, usually, yes, markets tend to react a specific way when you get a rate cut or you don't get a rate hike, but it doesn't always have to be like that. It depends the time frame you're trading, et cetera, et cetera. You know, look at all people being caught off in this year with all those RBNZ rate hikes or cuts rather, you know, or Aussie. It's just a difficult game. I think you're making it much harder on yourself than it should be if you're trying to trade that way. Okay. Any other comments or questions? Okay. Rock and roll, guys. Listen, thank you so much for stopping by. I'll post the recording on YouTube, on Twitter. Have an awesome one. Thanks so much. It was fun spending time with you. We'll do this again in a month or something like that, okay? Have an awesome one, guys. Take care. Bye-bye.